Hi. It's great to be here. This is my first time in Deauville. We are here, as you all know, to talk about financial services and how the sharing economy is changing that industry. The sharing has arrived in financial services, in case you missed it. And the technologies and the dynamics of that sharing economy are being felt everywhere in the sector. It's quite literally transforming the landscape of banking and investment, and it has upended the relationships that lenders have with their clients, from individual customers to small businesses and, of course, major corporations. Some of you have probably heard the term alternative finance or fintech. Many of you heard of fintech. Is fintech a familiar term with this group? Okay. Anyway, fintech basically describes the wave of new digital startups and financial services companies, technology companies that are coming into the rarefied world of high finance with their sharp elbows, and they're really shaking things up. And it's really sort of started in the wake of the 2008 financial crisis. You might remember people sort of lost a little bit of faith in their banks and their ability to manage and safeguard their money. Anyway, these new companies are coming in with a whole new menu of banking and investment products and services that simply didn't exist a decade ago. I don't think very many of us would have heard of crowdfunding 10 years ago. Peer-to-peer lending for consumers and small businesses. Digital currencies like Bitcoin. Online wealth management and financial advisory. I mean, did anybody do this 10 years ago? I didn't, I'm sorry. So these are just a few of the kinds of things that we've seen emerge in the last decade. And the companies that are offering these new services are using mobile and digital and internet technology, of course, to collect and aggregate and analyze data about millions of consumers and small businesses, and it is just simply redefining the way that money is saved and borrowed and invested and transferred and secured. And in some countries, the United States in particular, but also very much so in the United Kingdom, these sharing-based financial service models are actually on the cusp of becoming mainstream. And so for mainstream banks, this is creating new competitive challenges, as well as many new opportunities for growth. And of course, for borrowers and consumers, it is opening up a whole new world of access to credit for small businesses, people who may never have otherwise had the opportunity to raise the funds that they need for their great business idea. These platforms are creating new opportunities for them. And that is what we're here to talk about today. We have a very distinguished panel, and I would like them to come up here maybe and take a seat right now. And I'll just, while they're doing that, I'm going to give you a little bit of some figures to help you get a sense of the size and the scope of the fintech market, so you have an idea of how fast it's growing. Please, Christine and Fanny and Jean Lemierre, if you guys could please come up and take a seat, and I'll introduce you all individually in a moment. According to a recent Accenture report, more than $50 billion has been invested globally in almost 3,000 fintech companies since 2010. $50 billion in the world of high finance. That doesn't really sound like a whole lot, especially over 6 years. But what's really interesting is that close to half of that amount of money, about $22 billion, was invested in 2015 alone. And so far, only a small amount of that money, however, is investment that's being made by the traditional banking sector. It's coming instead from where the money in Silicon Valley is coming from. So it's coming from venture capital, it's coming from private equity, it's coming from high net worth individuals, et cetera. And according to Accenture, in 2015, banks represented just $5 billion of the reported fintech investments, which isn't to say that they're not investing in it. Of course they are. They're investing very heavily each year on developing their own internal fintech capabilities, between $50 and $70 billion a year. And then looking specifically at Europe, and I want to now look at the volume of transactions, money that is being raised and lent and borrowed using these platforms. The UK is far and away the largest market for online finance and represents more than 3/4 of the market for the whole region. According to the University of Cambridge, in 2014, and I'm sorry, that's the most recent figures I could come up with. In 2014, the total volume of European transactions in the online alternative finance market reached close to 3 billion euros. Again, grand scheme of things doesn't sound like a whole lot. But stripping out the UK from that number, you get to a little over than 600 million euros. That's it, 600 million euros so far. So you see there's a lot of room for growth in continental Europe. And as it happens, one of the biggest markets on the continent so far in fintech is France. And we are very fortunate to have representatives of the French banking industry here with us today. In fact, one of France's top bankers, Jean Lemierre, he's the chairman of BNP Paribas, as well as the chairman of France's Center for Research Studies on the World Economy. Jean has a long and distinguished career in international finance and in government. Before joining BNP Paribas, he served for almost a decade as president of the European Bank for Reconstruction and Development. He also served as a member of the European Monetary Committee. He was head of the European Economic and Financial Committee and chairman of the Paris Club of Creditor Nations. And in France, he has directed the private office of the Minister of the Economy. He served as director of the French Treasury and also as director of France's Internal Revenue Service. So welcome, Jean. Thank you so much for being with us. Christine Farnish is the chair of the Peer-to-Peer Finance Association of the UK, which both represents the British online lenders and serves as the industry's self-regulating body, if I'm correct. Christine has worked at a senior level in financial services for close to 20 years. She is the former Director of Consumer Affairs at the UK Financial Services Authority and has served on the boards of Britain's Office of Fair Trading and the Advertising Standards Authority, and is a former chair of the consumer protection group, Consumer Focus. So please welcome Christine. And Fanny Letier is an executive director at the Banque Publique d'Investissement, which is a French public lender that supports around 90,000 small businesses across France. It's known as Bpifrance for short. At Bpifrance, Fanny is responsible for small and mid-cap investments, transversal business support, and the accelerator programs dedicated to small businesses. So please welcome Fanny. So I wanted to start off our discussion. I wanted, Jean, if you could, to paint us a broad picture of how these new technologies and innovations in financial services are affecting the traditional banking world. And maybe tell us whether you think the incumbent banking sector is properly prepared for this revolution.
Bien, bonjour. Tout d'abord, nous sommes à Deauville, ravi d'être à Deauville. Ravi de vous saluer en français, vous l'avez fait tout à l'heure. Merci. I think you have understood. So, good to see you. Broad but short, I understand. So a few remarks. New technologies, may I use the wording new technologies to make it simple? Fintech and, okay. New technologies they are good. It's about innovation and it's about efficiency. I welcome, and even if I didn't welcome, they would be there. So it's better to welcome. So good, good. It's both an opportunity and competition. It's obvious opportunity. It's a way to better serve the clients. This is what we do. This is our job, to serve each of you, companies, in a more efficient way. And what you want capacity to make transactions quickly, everywhere, anytime. You want information, you want access to data. Fine. You know, banking is a business, and we should be ready to do it. It's competition because it allows new forms of transactions or services. And I welcome competition. This is part of life. This is the only way to bring good service to people. But it raises a few challenges. And I would prefer to call them policy or management challenges. You have a policy challenge. I'll be very short. Don't be worried. Policy challenge, it's security. Security of transactions, security of data. It's a key question for people. Banking is based on trust. We have to be careful. I will not go any further. Probably we should discuss this, but this is absolutely key. But there is an even more important challenge, which is the challenge I call the best of the two worlds. The challenge we have in banking is not to become a robot. This is maybe easy, but it's to put together the quality of a robot, but even more the quality of our colleagues in a bank, of human people. And it's easy to talk about new technologies, forgetting about them. They have the knowledge, they have the experience, they know how to engage, they know how to make decisions. And by the way, each of you, when you have a problem, you want to meet with them. And you don't want to meet with a robot. So the big challenge we have is once more to put together the best of the two worlds. That's key, and that's difficult. And I think we should have a discussion about this. What does it mean for a company? What does it mean about training, about skills, about business models, about how to recognize you when you enter into a branch and nobody has met with you before because you were always online? And I know each of you, you want to be recognized as a client of the bank. And this is a big challenge for the people in the bank. And that's what we need to do, to put once more the best of the two worlds. Please, let us stop opposing the two worlds. Those who are opposing the worlds are going to lose. That's key for us. Now, I would like to finish by one point. And you will understand that in the current environment, the political environment, this is a key question for a bank, and this is a key question for me. When we speak about new technologies, we should speak about women and men. What does it mean? We are positive in this room about new technologies, and we should be. But let's be clear, outside, in their home, people are worried, people are frightened, because we speak about robots, because we speak about job destruction. What does it mean? Is it right? Is it wrong? Who is going to create value tomorrow? Who is going to have a job tomorrow? How much people will be paid tomorrow? If we are not careful, if we don't open discussions in an honest, clean way, without any bias, without any protectionist views, but open-minded for the kids, for the progress, then we may make new policies. What is it about? It's about education, training, adaptation, This is a huge question for society. I stop here because maybe I haven't been careful enough, but I haven't heard this too much today. But this is my key question. Once more, bankers are very happy about efficient processes we know how to do. We know that we have the best skills with the staff of the banks, but we know also that we need a harmonious society in which people live well. I stop here. You understand what I mean? And I welcome the discussion here because of this.
Thank you, Jean. I wanted to ask Christine, actually, from where you sit. Do you think that what Jean's describing is a sort of an accurate description of what today's banking customer needs and wants? Do they want that? Do they still want that personal touch, the human being to interact with? Or is there a generation of people now who, yeah, that's all well and good, but they would like to have a quicker decision on their loan requests. They would like to have things work more efficiently and with fewer costs and with greater transparency.
Well, I think that's a very relevant question, and I do tend to look at this world of financial services from the customer's point of view rather than the incumbent provider's point of view. I think most customers would like choice, but they certainly want value for money. They want good quality, responsive, fast, efficient customer service, and they don't want to be waiting ages in limbo if they apply for a loan, for example. They want an answer quickly because they might need to borrow that money for something really important. And they, people will require all of these things. And increasingly, we're all living our lives much faster under a lot of pressure with much more uncertainty. We do need responsive, flexible services, and particularly financial services, which after all are the sort of petrol in the engine of life, if you like. Banks do a fantastic job in some segments of the market, but they could certainly improve in terms of customer service and in terms of the costs and charges that are built into their business model. And I think the great thing about alternative finance, as Jean says, it provides an alternative. It provides an alternative form of doing your finance, which is online, which is digital, which is fast, which is responsive, which is not done by robots exactly. It's done by some very smart people who've prepared and written some very smart systems, and people are still making the credit decisions, for example. It's not machines doing that, but they have the help of a lot of data and a lot of risk modelling, just like banks do. But they do it quickly, and they do it at low cost. And I think these alternative models for many segments of society, particularly the younger generation, and perhaps particularly for women entrepreneurs who have been perhaps less well served by traditional financial institutions, I think they're a fantastic new set of entrants into the market.
Can you talk us through a little bit about how the peer-to-peer market developed in the UK? It's obviously filling a financing gap for a significant community, both on the borrowing side as well as on the investing and the lending side.
It's 10 years old now, so that's very, very young in terms of banking. Banks are hundreds and hundreds of years old, as are insurance companies. So peer-to-peer lending platforms have only been around since 2005, and the very first one started off in the UK in 2005. The UK is the world's third biggest market after the US and China. Actually, there are 3,000 platforms in China, so I think China's a very exciting place from this fintech perspective, but we haven't got time to talk about that. In the UK, the platforms really took off in about 2010, 2011, and that's when my little association was formed to actually lobby for formal regulation, but in the meantime to do self-regulation and to promote awareness and understanding of what peer-to-peer lending is, because most people still haven't got a clue. And what it is you've got ordinary consumer investors, if you like, people who've got some money to save or invest, like me or like you, who want some sort of halfway house between the safety but low return of a bank deposit and the racy, risky, high return or possible loss of an equity product. And peer-to-peer lending on a digital platform forms this nice halfway house in terms of an investment or a way to accumulate and get returns for your money. And what the platforms in the middle do is they manage the risk, and they also diversify your loan across usually at least 100 borrowers. But the really important thing they do is screen all the prospective borrowers who may be other consumers or they may be small businesses to make sure that they really are creditworthy and they're going to pay their loans back. Because anyone who's in the world of credit, Jean will be the first to say this, if you don't manage your credit risk, you will not survive into the future, and you will have a big problem when the economy starts to go bad, just as happened in the financial crisis with the banks. So it's all about sound credit risk management. And I mean, all the independent evidence so far shows that the good platforms are doing that at least as well as the banks.
Can you talk a little bit about some of the more innovative ways that data is being used, big data is being used about consumers and borrowers to sort of that's giving a different, more, perhaps a more complex, well-rounded picture of a prospective borrower to an investor or to a lender?
Well, I think the most exciting place that's using big data and cloud computing and machine learning in that sort of way, you have to look at the big platforms in China, actually, who are able to hoover up all this data from their customers. They might be doing e-commerce, or they might be running a mobile app, but they know exactly what their customers are doing in terms of what they're spending their money on. And they're using this data to work out who's creditworthy to lend to, who needs a bit of micro-insurance, how can we sell these people other financial products and make a profit from doing it. So Tencent and Alibaba are the two huge companies that really are doing amazing things with technology. In the UK, we obviously have data protection and privacy concerns. The data that's used by the platforms tends to be exactly the same data that the banks use, so it's from credit reference agencies, but it's supplemented by business accounts, other data that we ask customers to give the platforms, and by the history and practice that's now being built up by the platforms. And it's interesting, in some segments of the market, for example, invoice finance, which is providing short-term working capital to small start-up businesses against their quality invoices from good quality customers. I think the platforms are now able to provide very good service to new sectors of the economy, whether it's technology sectors, software houses, biotech, or maybe media and those sorts of businesses, creative media, that the banks don't necessarily have a long tradition of serving, because these are new segments in the economy, and because the platforms are able to learn so fast through the use of big data, they're able to get into those market segments and provide some very good products, which perhaps are being a bit left behind by some of the banks.
Fanny, at Bpifrance, your customers are exclusively small businesses and entrepreneurs. And I think one of the big attractions of fintech to this particular clientele is the fact that these platforms simplify the access to credit. The process is faster, it's cheaper, and in many ways it's seen as much more democratic, since it eliminates some of those intangible barriers that some borrowers face in traditional relationship-based banking. How are you adapting your services to meet this competitive challenge and to use these technologies to get closer to your customers and understand their needs?
You said it, Bpifrance is a bank of entrepreneurs for entrepreneurs. We are dedicated to financing SMEs and pushing them all the time, every day, encouraging them to engage into their digital transformation. We finance innovation, and we have enlarged our innovation guidelines to finance not only innovation in technology, but also in services and also in business models. So when you say that every day to your customer, you have to apply it to yourself. That's why we engaged into a digital transformation, an internal digital transformation, and for that, of course, we cooperate with fintech. I think Jean said it clearly. Fintech are facing real challenges: data protection, consumer confidence, cyber criminality. These are not small challenges. Banks also are facing challenges, and the main challenges for bank today is to remain connected to the real economy and to consumer needs. So we want to use cooperation with fintech to have the best of both worlds and make sure that we can provide our clients with the best services, easier services, facilitate access to finance, be more transparent also about how we price credit. And so we have engaged a lot of projects with that. We want to cooperate with fintech because if we don't do, other will do. We didn't talk about GAFA, but Google, Apple, Amazon, and in China, Baidu, Alibaba. They're all looking at fintech just to see if they can provide financial services. I'd rather have regulated banks cooperating with fintechs to provide modern services rather than having GAFA financial services with real concern then about data protection. This is something we have to keep in mind. If banks do not modernize themselves, other people will take the place. That will not be fintech to me, that will be GAFAs. So what are we doing then? A lot of those projects are ongoing, but we found out that we had a difficulty addressing startups and very small businesses. We guarantee banks that finance very small businesses, but we don't finance them directly because we are a small bank, only 2,200 employees. And we wanted to overcome this difficulty. So for a few weeks now, we are providing online loans. So you can connect to our internet website to get a loan up to 50,000 euros, and you can have it directly online. I insist on something because we are not computers, and banks do not have to turn into computers. All those online services are connected to our teams because you need advice. When you go to a bank, what you have is advice, and we should keep that in mind. So we want to do that for our financial instruments, but also for other tools that we develop to make sure that entrepreneurs can achieve their goal, and their goal is business development. So we will develop an online digital store to provide our customers with operational support. Of course, you can find the contractual documentation that you have with your bank so that it's transparent, and in time you can find the contractual conditions, but you will also find operational support for your business development, such as pushing information about your new product, such as how to recruit through social network, such as benchmarking your website, because we want to help entrepreneurs to achieve their goals. That means to achieve growth, and for that we have to combine finance with advisory services.
Super, thank you. I wanted also to return now to you, Jean, because as I mentioned in my introduction, banks are investing far more in-house right now onto their fintech capabilities and new online services, about 10 times more than what they're investing to support partnerships with startups and other technology companies. Can you tell us, though, because BNP Paribas is being quite active, can you tell us a bit about your fintech strategy? Do you see startups more as rivals or potential business partners?
I think it's good you say we are active. It's better if you say it than I say it. So thank you. Yes, we are very active. Look, once more, technology is part of the business. Technology, we shall not grow. We shall not do business. You know, this is no longer a question for us. So yes, we invest a lot in all the business lines. All the business lines are impacted by technology. We speak a lot about retail, about SMEs. But if you go to the investment banking, to insurance, to asset management, whatever it is, technology is there. So we need to invest a lot. But you know, we are a big organization. And even if my colleagues here are extremely clever, extremely smart, they live in a big organization. And unfortunately, I may put constraints on them. So it's easier from time to test our ability and to go outside. And we have engaged huge processes worldwide. We have a specific name for this, L'Atelier. And I know that the head of L'Atelier in California is here, so you could meet with her over the dinner and have discussions. But what do we try to do? We try to engage with startups. Most of them are young people, bright, they have good ideas. Sometimes they don't know how to deliver. It's difficult for them, but we know they are right. And they know that through engaging with them, we shall do better. So we are developing partnerships. Sometimes we are investing. We don't say too much because it's money. Huh? We don't want prices to go up. We are careful. We are bankers, you know. But yes, we do invest. We do finance. We organize days, 2 days of meetings in Paris, in Berlin, in the US, with young people. There's some kind of competition. We provide money, resources, premises to try to see who's the best on a specific challenge. And then we try to support them and to grow. There's no other way to do massive engagement with young, bright people and support to them. And they will deliver, and they will bring a lot to you, a lot. And if I want to be cynical, I'll simply say, if we don't, other people will do. So, believe me, we do.
And Bpifrance has also been investing in some fintech platforms, if I understand correctly, crowdfunding, for example.
Yes, we do. We have invested in Uniland, which is a crowdfunding platform, actually one of the main platforms in France. Crowdfunding in France is still small. It's 300 million euro of funding every year. But it's growing fast, so we wanted to invest in it just to see how the market develops and how it can change the way we finance startups and very small businesses. We also have engaged in an excellent cooperation with the European crowdfunding network, and we've gone throughout all the regions in France to make sure that those solutions are known by small companies. And we have an online marketplace. It's called Tous nos projets, all our projects, where people seeking crowdfunding can get in touch with all existing crowdfunding platforms in France. Actually, it has a great success. So we have about 20,000 visits every month on this platform. And we have currently 1,300 projects online with a success rate of 83%. So we're happy. It's just a beginning, but it's developing.
Terrific. Christine, what do you think about these kinds of approaches that banks are taking to FinTech? Is this the most constructive way for them to approach this challenge?
Well, I think the key thing is the engagement in what's going on out there in the market, and all the signs I see are that the banks are now very engaged, and quite for obvious reasons, because as Jean says, if they don't engage, then there are going to be some others who do, who will presumably start to become more powerful and more competitive. You know, I think the combination of new technology and smart systems and the use of data integrated into retail financial services in these platform-based providers who can be low cost, very quick, very nimble, very user-friendly, and offer, you know, very good value propositions on both sides of the platform, whether it's the people who put up the money or the people who borrow the money, are clearly going to, you know, form a key part of the financial ecosystem in future. So I think it's great. And I think, you know, if I just think about the big banks in the UK, and I think this is true for in many markets, the banks have got some problems with their legacy systems. I certainly know in the large bank where I used to work, all the investment in systems went into the investment banking part of the business and the wholesale part, very little into retail. And some of the systems are really now very old, very creaky. There does need to be that investment in technology. I think everybody knows that. So there's a catch-up job to do. I think regulation is the next big point of discussion with the banks, because I still meet some bankers who say, oh, well, peer-to-peer platforms are competing with banks, so they should be regulated exactly the same way that banks are. But of course, that's not quite right, because all the platforms are doing is moving around existing money that's already in the system, whereas the banks, of course, do this wonderful smoke and mirrors stuff called maturity transformation and are a key part of the creation of money in the financial system. And that's one of the reasons why they're so heavily regulated, and regulated in a special way. Obviously, peer-to-peer lending platforms do need regulation. It's in no one's interest to have people out there who are not good at what they do and who are lending money to people who can't pay back. That's just going to make the whole thing go bad. So they do need to be doing the job properly and seriously.
Right. And the UK has actually started to step in with new bespoke regulations for this industry. And the industry itself, though, has taken a pretty large role in defining what those regulations ought to be. And I wonder if that's wise. I think that for some people that's a controversial thing, to have the those who are to be regulated also drafting the rules. I mean, that was sort of one of the big things that arose after the financial crisis in the first place. So
well, let me be clear, we do not draft the rules. The FCA drafts the rules. What we did do, though, was when there was a gap between when these platforms started to take up and before the FCA came in, and it's really only now properly coming into force this year, actually, with formal authorisations. Up until now, it's just been an interim, fairly light touch regime. What we did was put in place our own set of rules on a voluntary basis for our member platforms. But the FCA have replicated quite a lot of what we had, but they've also gone further in a number of ways, which is all very good, actually. I think it's a process of evolution because the market's continually changing. New platforms are coming in, business models are adapting. As the sector matures and gets older, then the regulatory regime must stay up to date with it. And, you know, supervisors, financial supervisors need to start working in a very new way. They need to really be understanding what's going on in real time rather than thinking they can go in and do a supervisory visit in 6 months' time, because they'll just miss it.
Jean, I wonder if you think that, because there are some countries that, rather than create bespoke regulations, are sort of stretching their existing regimes to cover this sector. Do you think that's more appropriate, or I mean, are regulators not adapting to this situation quickly enough? Do you think?
Well, that's a crucial question, and we need to be very, very careful about it. I've listened to you carefully. Maybe in private, I'll tell you what I think about what you have said. You know, there is a bird, the cuckoo. The cuckoo lives in the nest of another bird.
We're not living in your nest. I'm sorry.
That's the point. That's exactly the business point.
I think that's unbelievable.
No, that's why I said I've listened to you carefully. That's exactly. You have been careful.
We'll have a good discussion.
Yeah, you have been careful enough, in proper English, not to describe a cuckoo. So I can agree with you. But if you had the sense of a cuckoo, I would have had a problem with what you say. That's crucial. This is a crucial question on business. This is a business question. Then you have regulation, which is a different debate. Regulation is not about protecting banks. Regulation is about protecting consumers and public goods and security of the system. And I will not be long, but maybe I'll tell you a story. It's easier to tell a story. But first, need to be careful about data protection. When I hear that, you know, you can use data of consumers, these are serious questions on which there's a need for an open debate in society. We are negative on this because we protect clients. Maybe people want a different story, but we should have an open debate about this in society. We cannot do this like this. That's cyber security. All these questions are extremely important. Now, on regulation. I was not long time ago in a large country, and a high official said to me, we have a lot of platforms to finance SMEs, and we need them. We need them because SMEs are not financed by the banking sector in this country. And this is true. He was right. He said, but we have problems. Investors are cheated. They don't get their money back. and borrowers are not well treated. What should I do? I didn't know what to say, but my simple answer was, maybe you should invite them and send them a letter telling them you know them. In English, they call this a license. Then you should ask them some money, because if there's a problem, they would have a buffer. They would be able to pay. And then probably you should make sure that they follow appropriate training to understand who's the client. You may not call it a bank, but it looks like a bank. What do I mean is that there are good reasons why the system has been built this way. And we need to be very careful if we want to make sure that technology is not used by bad people, which, by the way, has been the case for Bitcoin. And you know this, and this is a pity. So we have to be very careful to design appropriate regulations based on consumer protection, investors' protection, and what I call public good, which is taxpayers' protection. And you will go back to license, capital requirement, risk management. And if we don't do this, we are going to have a problem. It's not protectionist. I do not protect the banks. I simply say what I think about what we should do to get the best out of technology.
Before, thanks.
No, I know they are not bankers.
Just in closing, I wanted to get you guys to react to some very interesting research that I found, and bring this back to our women's forum, and specifically bring this to the relevance to women. And that was, I think, it came across a study that was done in 2014 by Hebrew University in Jerusalem. And it was, they gathered data on thousands of business startups that were funded on Kickstarter. You all know Kickstarter. The study focused on gender. And they wanted to see if crowdfunding could level the playing field for women entrepreneurs who were trying to raise capital. And what they found was quite telling. They found that only about a third of the projects on Kickstarter were led by women. But they also found that the women enjoyed a much higher success rate in getting funded, about 70% compared to 60% of the men. And they also found that Kickstarter projects led by women were mainly financed by other women. Male investors only invested in about 1 out of 4 projects that had female leads. So, what does that tell us? What should we take away from that information, Christine? What is?
I think what it tells you is that these modern digital platforms tend to be gender blind, and they look at a proposition on its merits using objective data, and they don't necessarily look someone up and down in physical form and have a conversation with them and think, well, it's a woman applying, I'm not sure she knows what she's doing, which is, I mean, all the data shows you that women entrepreneurs tend to get the no answer more often than the less answer from many traditional providers of finance, because it would appear of their gender rather than the merits of their case. So I think the fact that the platforms can be neutral to this question is probably a good thing and very good news for women. They look at the case on its merits, based on the evidence and based on whether or not the risk proposition stacks up and it's a viable thing to invest in. And obviously, startup equity funding for, like Kickstarter, for new businesses, it's a bit different from peer-to-peer lending, who don't do startups. It's very different. But I think the same gender-blind point would apply.
Terrific. Does anyone else want to chime in with a thought on that?
Just maybe one word to say that studies show that when women raise money, they ask for twice less than men entrepreneurs. So of course they are more concerned by crowdfunding and crowd equity. It's important for them. And in France, the statistic is such that we have only 11% of entrepreneurs that are female entrepreneurs, but projects funded on a crowdfunding platform, for half of them are projects initiated by a female entrepreneur, 50%. So the statistic is good.
All right, terrific. Well, thank you to all three of our panelists, and thank you to you all for listening. Much appreciated.
Thank you for finishing on time.